Welcome to the Alpha Wolf Impact Club. I'm Tim Weintraut, and this is where we shine a light on small companies with big ideas. Our mission here is crystal clear. We want to identify, support, and champion game changers. Those companies that are tackling massive challenges, revolutionizing industries, saving lives, or making us more efficient. For example, today we have Bryan Kitchen from Ascent Industries. Ascent is a specialty chemicals company. They have specialty chemistry solutions at scale across an array of high value segments: personal care, agriculture, case, oil and gas, water treatment, textiles, pulp and paper, and lubricants. 2014, this 75-year-old specialty chemical company decided to venture into a different business entirely, specialty pipe. That turned out to be a not a great call for the company overall. And Bryan and his high impact team were brought in a couple of years ago to put the company back on the right track. They have divested the non performing assets of the specialty pipe and are primarily focused on chemicals as a service for customers. With the transformation complete, they're ready to unlock shareholder value, and I'm going to let Bryan tell you more about that in just a moment. This is not to be taken as investment advice. I am not a certified financial planner. This is for education and entertainment purposes only. I encourage everyone to do their own due diligence. Hey everybody, Tim from Alpha Wolf Capital coming at you with a follow-up to a company that not very long ago did our first interview with. And Bryan Kitchen is in the house from Ascent. And I think this was really good timing. I thought our first interview was pretty good timing too.
Got a few things going on.
So, Bryan, anything going on in your world?
Yeah, every day. Growth, and growth. Yeah, I mean it's been a hot minute since we connected. So one of the things that we talked about during our last conversation was the tubular segment and how, throughout the year we've been executing portfolio optimization, and we sold off two of our operating entities within the tubular segment, but we still had this one lingering property in the portfolio that was under a sale leaseback transaction, and that property was costing us, $2.1 million a year, in both adjusted EBITDA and cash, quite frankly, for rent and utilities and taxes and insurance. And what we announced on Monday, a day ago, was we've successfully brokered a transaction to get that lease assigned to another party. So now that obligation is completely off of our books rolling into 2026.
Which is awesome, right? So that was the last piece for you, right?
That's right. Nowhere to hide.
So for anybody that's not familiar with the story, let's just give them a quick recap. What is
Sure.
this?
Yeah, so 75-year-old company, publicly traded, obviously. We started off as a specialty chemical company about 20 years into that journey back in 1965. We decided to implement a diversification strategy, and we added in stainless steel tubular assets to the specialty chemical mix. And we had two operating segments for literally decades. But late last year, we decided to execute portfolio optimization and become once again a pure play specialty chemical company.
So when you say we, not necessarily we as in you, them, we're talking that was them prior to you coming in, what, 2 years ago?
That's right.
And you came in even when you came in 2 years ago, you came in as a specialist for the specialty chemical side of it, right?
That's correct. Yeah, I was brought in to basically build up and build out the specialty chemical segment.
Okay. And that was after you had, was it once or twice already kind of done a turnaround in that space?
Yeah, before joining Ascent, a lot of the team members that I have here at Ascent were actually a part of a turnaround previous to joining Ascent. So
And then as you said in our last meeting, which I loved, you said kind of bringing back the band back together.
that's right.
Here
No,
it
we really did, right? So, after we sold um the other entity, we were effectively we Ryan Kavalauskas and I, our CFO, we were effectively retired for a hot minute. We would meet up in the local library, which shows you just how exciting we are. And we would talk about, well, what's next and what we do differently, and entered in the Ascent opportunity. So we leaned into that, and yeah, as we moved into the business and elevated into our current capacity, so that's when we really started to literally put the band back together. So we have folks that have worked with us for a number of years at the prior turnaround, but also reaching back even further into the network from the old Dow Chemical days. Actually, one of our guys that's on the team, he was my intern back at Dow Chemical, what feels like 100 years ago. So we have a lot of fun. We've got a great team. We've given them the people, processes, tools, capabilities to go off and do just amazing things. And the cool thing for us, the cool thing for me is we're really just getting started, right? So first year was all about kind of stabilization and fixing the foundation. Rolling into last year, or rolling into this year, was all about kind of portfolio optimization in the first half of the year. Now, it's really about growth, and growth, organic growth. So the good news, bad news is, bad news, we're grossly underutilized. The good news is, from an investor standpoint, we're grossly underutilized. We've got tons of runway for existing organic growth within the current asset base. So we're super excited about that. The selling project pipeline is taking shape. It's very healthy. What I shared to the investor community back at the tail end of Q2 during our earnings release is we had developed a pipeline of about $25 million worth of selling projects that were decisions were to be taken inside of Q3. And what we were able to report out after our Q3 earnings was we had actually won 49-50% of that $25 million in terms of selling projects, which is obviously going to have a material impact on the size and scale of our revenue as we roll into 2026, with a really compelling absorption impact as well. So very excited, right? We're not done. There's no ticker tape parade, but that momentum, that organic growth momentum is really beginning to build.
Six Sigma black belt, right? That's you.
Ninja, yes.
Listen, I mean, what I love about this story is, and I we talked about this before we hopped on. When you have a turnaround guy come in, typically, just from my experience, it's about 2-3 years that before the culture really changes and sets in, and you've got your people back, your processes, just the way you view things is really starts to sink into the company, right? And that's where you are right now. And we looked at the chart, which I know isn't your thing, and I'm not a chart guy really either. I just happen to know how to look at them and identify areas of resistance and support. That's all. I'm still a fundamental guy. That's really my thing. But if I can match up an interesting chart formation and a good fundamental story, then I would think that my chances of hitting a home run increase dramatically, right? So we talked about where your resistance level was, and you just recently took that out, right? After reporting, which I think is a very positive sign, right? Because it's been months. I mean, it's maybe no,
Years.
it's been more than months. It's been a year, right? I mean, it's been a while that you had bouncing up against that 13-20 mark and having a difficult time getting through it. You just blew right through it. So now I think what happens is potentially that that area that was acting as the ceiling now becomes your floor, right? So we're coming up into the holiday season, probably not going to be a lot of activity. You might see some lower volume pull, and you come back to that level and just kind of base sideways, right? Until the new year kicks in and new stuff develops. And then you've started now the the long-term trend of going from the lower left to the upper right, which can last a long time, right? It was the other way around. It was from the upper left to the lower right. To break that trend, that's a huge trend to break because longest is got the most, well, how you want, it's got the most strength behind it. The longer it goes, so you need something of equal force or greater force to break that, which you've now done, right? That's exciting. That's an exciting place to be. I love that you got the band together. I love the fact that you're transparent. You're a straight shooter. And I don't think that the specialty chemical industry is going to go away anytime soon.
No, not in our lifetime.
AI is probably not going to replace it.
Nope. No, it's not. I mean, look, we're using AI anywhere and everywhere that we possibly can to help us accelerate, but no, it's not going to replace specialty.
It's not going to replace specialty chemicals, right? That's what I think is exciting about. I mean, everybody can talk about the AI stuff, and I love AI. I use it every single day.
Mm-hmm.
And just like you just said, you're using it too, right? So I think that's just going to help you come up with better products, right?
Yeah, I mean, there's a lot of different applications for it. So we're fully embracing the digital age, as well as the adoption of AI. So
You're not afraid of it,
we're not afraid of it. We've got a lot to learn, just like everybody else around the world right now. But we're embracing it with open arms.
right? Which I like, right? I mean, you obviously have a system because you have the crew, right? But you guys aren't afraid to, I guess, dabble in other areas of that aren't your expertise, right?
No, when it can help us, we're leaning in, right? So, for us, it's, people, processes, tools, capabilities. Well, AI is a tool. So let's lean in. Let's see how we can make it work for us.
Right. So you've got underutilized. How many facilities do you have?
Yeah, so we have 3 manufacturing sites with 5 manufacturing plants on
Okay.
them. Under 50% utilized right now. We've got roughly $60-ish million worth of cash on the balance sheet. So we're in a really good position to be in. And like I said, from a growth standpoint, the pipeline is mounting. We're very, very excited about what 2026 is going to look like.
Are there any with that kind of cash? Are there any potential acquisitions that you think could be accretive? Maybe.
Yeah, I mean, there's multiple levers that we can pull, and I think from an organic growth standpoint, what we're really challenging the team to do is go out and bring us really solid return on invested capital projects that we can wrap our arms around and invest in. So we're efforting that. Alongside of that comes M&A. It's not an or for us, right? It's an and for us. So we've been working that over the past year. We actually had a deal that we were under LOI on in Q3. Ultimately, that deal did not transact, and that's okay. It didn't transact for all the right reasons, but we're pulling the levers on that as well. And then beyond that, buybacks. So we've been pretty aggressive this year in our share buybacks. We've bought back a little over 6% of our outstanding shares, and we're continuing to operate inside of the confines of our 10(5)(b)(1) program. So.
Do you own a good chunk of shares?
I'm sorry?
Do you own a good chunk of shares?
Yeah, not enough, but yeah. Yeah, I mean, look, I bought half of my annual salary in stock last year.
So you put your money where your
More than
mouth
more
is.
than half. But yeah, no, and then it's not just me, right? So, others on the management team have gone in as well. So we're vested owners. We're violently aligned, and we're just starting to build some momentum and have a little bit of fun.
See, I love that, right? That's another. So how much debt do you have on the books?
How many debt? How much debt?
Yeah.
Yeah, zero.
Oh, wow. So
Right.
zero debt, cash,
Yep.
insiders own. I mean, these are all the things that are those little check boxes. Check,
That's right.
right?
That's right.
Love
Yeah.
that. Maybe not the sexiest business in the world to some people, but to me, very sexy business, right?
Yeah, I mean, look, specialty chemical supports what roughly 25% of the GDP. So I mean, while you might not see it, right, staring at you in the face, they're everywhere. So
It's
we're
kind of like a recurring revenue model, right? Because if it's depending on what the specialty chemical is,
sure.
you're going to have to use it over and over and over again, right?
That's right. That's right. The relationships team tend to be on the stickier side of the equation. We love it when we can get partnered with customers that have technical problems that we can kind of come alongside of them and help them solve through the process. So the pipeline is growing, tons of capacity. Buckle up.
I love this story, man. I really think that I think this is a great one. I mean, if you're not familiar with the story, I would suggest that you do your own homework. I'm not telling anybody to buy this. That's not what I do.
That's
I
right.
just try to present compelling opportunities. And I have a process that I go through. I look for companies that can have an impact on humanity. I think a specialty chemicals company is definitely falls in line there. Um, but then the specific story to this company is what makes it really attractive to me. The fact that you've come in, you're a turnaround guy. Your whole career has been in chemicals, correct?
That's right.
So you're not a rookie, right? You kind of understand this whole industry. There was something you said that I really liked. I can't remember where you said it, but about you're not going to just make something because somebody had an idea that
Mm,
this might be a good idea, right?
sure.
You're gonna make chemicals that hopefully you have a customer that is requesting, or it's a chemical that you're fairly comfortable you can make because you've done it before, right? Is that a correct
No,
assessment?
you're absolutely right. So that was in the context of our selling project pipeline that continues to grow and develop. And I think what we were talking about is kind of our criteria to even make its way into that pipeline. So underpinning, A, have we made it before? B, do we have the capabilities to make it? But underpinning all of that is, an expressed customer need, a customer that has a problem that they need solved. So that's kind of the gating steps before we even start, talking about, return on investment and margin profiles and market, segment alignment, that type of thing. But yeah, the pipeline is taking shape. It's not built up based off of wishful thinking. It's not, a salesperson that wants to put a big number in a spreadsheet just to make themselves feel, sleep better at night, for crying out loud. That's not who we are, and that's not how we operate.
And you're not afraid to walk away from a money losing proposition either, right?
No, not at all. I mean, when you think back to when we joined the company, we had a fair amount of business that we were selling at prices that were below our variable cost, which in and of itself makes your head want to explode. But where we couldn't raise price to extract the appropriate value, right? The appropriate value. We gracefully deselected that business, and like our gross margin profile over the past number of quarters have supported that. So
Right. And look, these are all the kinds of moves that I love to see, right? I mean, if it's not making you money, you can't make it up in volume.
that's right. That's
Right?
right.
So these are all good moves. I think like you just said, you're now you're starting to have some fun, right?
We are. Yeah. No, I mean, we've got a great team, hard chargers, a lot of grit, a lot of hustle, drive to win, strong alignment. That cultural shift is beginning to happen. And now the cool thing is we're starting to get some of these wins It's not, it's not an I, you, or they thing, right? It becomes a we thing. So there's a fair amount of momentum behind this, this we celebration as we, lock down and win some of these new pieces of business. So it's exciting. We've got a lot more work to do. This is not, this is not a ticker tape parade. There's no victory bell for crying out loud, but the momentum is building. The foundation now is solid. The foundation now is clean, right? No distractions from the past. And it's on us. It's on us to go out and execute.
Yeah, and I just have a sneaky suspicion that you're going to do just that, right? I mean, and the share price is telling you that. I mean, it's not. It's everything is kind of like lining up extremely well. So, the breakout spot was 13 and change, 13, 20, 25, somewhere in that area. If the stock over the next 2 months, because it is the holidays, I mean, we're going to get some dried up trading. This would be a great opportunity to start building a position. I'm not telling anybody to buy it. I'm just saying
Sure.
that could be a very interesting spot to start taking some shares, right? So if you I would recommend that you buy at least one share. I mean, that way, I mean, I can't get in trouble for that saying that. I mean, it's so everybody can afford to lose $13. I mean, right?
It's
So
a happy meal.
exactly. So buy one share, and the reason I say that is because you own it. I mean, when you own something, you tend to pay attention to it more. That's the only reason why I say that. And sign up for their email alerts and start getting to understand Bryan and his team and how they're executing. Because if they continue to execute, who knows where this thing can go, right? Do you feel as though well, I'm not gonna ask you. I always want to ask the CEOs, but if they really can't respond as to where they think that
You know what my answer is going to be.
right. All right. So is there anything that you would like the listeners to know that I may have missed?
No, look, I think we've covered it all, right? Portfolio optimization is now 100% complete, so no distractions. We've got a really good asset base, grossly underutilized. We've got a selling project pipeline that's mounting. We've got, a reasonable amount of cash that we've got in the coffers and no debt. And we've got really great, talented people. So foundation set. Now it's about execution.
What are the average margins for your industry?
Yeah, so what we like to describe is our target is nominally 35% gross margin, nominally 15% SG&A, and nominally 15-20% EBITDA margins. And if you look at our peers out there, you'll see ranges kind of in that same genre. So we're not flashing anything that's going to require anyone to go out and take a drug test or anything crazy like that. These are all kind of in the right range. But I do think it's going to be really interesting for us specifically. Again, just getting back to the operating leverage side of the equation as we start bringing in, material chunks of net new growth, what the overall impact is going to look like for us. Honestly, I think we've outpaced our own expectations around just the gross margin profile build. We said we were going to be kind of in that 35% genre in 2028, give or take. Well, our third quarter, we were right around 30% across continuing operations. So we're well on our way. Again, no victory lap, but we're well on our way.
Right, right. Clear vision, and you got buy-in, right? So
We
I mean,
do.
this is where it really does start to get fun. Bryan, I appreciate you coming in and doing the update. When should we do a follow-up?
Maybe after Q1 or Q4 earnings.
Okay, when are you reporting Q4?
If I knew that answer, I would tell you, but it's going to be sometime next year. So
All right, man.
I'll
We'll
bounce
stay in
back to once we
touch.
get that locked down.
Yeah, we'll stay in touch. And if you have anything between now and then, though, that pops up, right, it
Absolutely.
might be okay. This is a good one, people.
We'll do it.
Pay attention to this one. Bryan is a rising star. And Bryan and his
I wouldn't go that far. Brian
right?
Steve is awesome. So leave it at that. But really appreciate you taking the time, Tim.
All right, thanks, Brian. Hold on one second. I'm going to shut this off. Thank you for tuning in to another CEO interview here at Alpha Wolf Capital. Today we had Bryan Kitchen from Ascent Industries. I hope you enjoyed today's interview, and if you did, do us a favor. Give us a like. How about giving us a share? And while you're at it, make sure you smash that subscribe button. All of those things are extremely important to us here at Alpha Wolf Capital, and we appreciate you taking the time to do that. Until next time, stay safe. Alpha Wolf Capital wishes you the very best of success.